Welcome in this video. Where will ZBCN coin fall end? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, we can observe the presence of a clearly defined support zone where the price has repeatedly touched and reacted upward in the past. In technical analysis, such zones are referred to as demand areas or buyer-concentrated zones, and they are often where investors re-enter positions and price reversals occur. However, based on the most recent price movement, we see that this strong support level has been broken to the downside. This breakdown may indicate that selling pressure has intensified in the short term and that buyers were not strong enough to hold this level. However, this situation should not always be interpreted negatively. In fact, in technical analysis, breakdowns often serve as starting points for new opportunities. While the break of the support zone may initially suggest market weakness, such movements can sometimes contribute to the formation of a healthier trend structure on larger time frames. For example, this decline could be a fake out, meaning a false breakout. In such a case, the price may dip below support briefly, and then quickly recover back above previous levels. This scenario can present a buying opportunity for investors at the bottom. Additionally, recoveries that follow sharp declines like this can lead the price into a stronger and more decisive upward trend. This breakdown can also mark the beginning of a retest process. In other words, the price may now test this previously strong support area as resistance. If this level is reclaimed, it could pave the way for a much stronger upward wave. In technical analysis, broken supports are often retested before the price reverses direction to the upside. If this retest phase is completed successfully, it may give investors a strong buy signal. Therefore, a support break can sometimes be a precursor to a major rally. At this point, another key element to consider is whether the decline occurred on high volume or low volume. If this breakdown happened on low volume, it questions the reliability of the technical break. In other words, it means that major players may not have confirmed the breakdown yet. This increases the probability of a price reversal to the upside. For this reason, even if the price is currently below this level, a new upward move could trigger a rapid recovery process. On the other hand, there is also a strong possibility that this downward move is simply a correction aimed at reaching a support zone on a larger time frame. In technical analysis, every healthy uptrend needs a correction. The current breakdown and decline may in fact be part of such a correction. In this case, the move below support could be temporary, and after forming a new low, the price may respond with a stronger uptrend. In short, while the break of the current support zone may appear to be a sign of weakness from a technical perspective, it can also signal new opportunities. The market sometimes makes false breakdowns to mislead investors and then continues with a much stronger directional move. Therefore, this breakdown should not only be seen as a bearish signal, but also as the potential beginning of a bullish scenario. If the price recovers from this zone, a much stronger uptrend could begin, but we cannot base our analysis solely on support levels. Let's now take a look at the other metrics. Stay tuned. When we carefully examine the chart, it is clearly seen that the price has been following a downward trajectory for a certain period and has formed a distinct downtrend accordingly. Such descending trends in technical analysis often reflect periods where investor psychology is dominated by fear and uncertainty. During this trend, every upward attempt ends below the previous peak, and each pullback results in lower lows. This creates a ceiling effect that presses down on the price in conjunction with the trend line, forming a significant technical barrier for market participants. However, the key point to note here is that while the downtrend is still active, some early signals suggesting the trend may be nearing its end have slowly started to appear on the chart. In particular, the price approaching this trend line multiple times and showing weakening downward momentum with each contact could indicate that the trend is no longer as strong as it once was. This provides important clues that a potential breakout in the near future could trigger a strong upward move. At this stage, a breakout of the descending trend line would be a highly significant development in terms of technical analysis. Downtrend lines are closely followed by investors and psychologically influence the direction of price movements. A breakout above this line is considered a strong sign not only that the current downtrend has ended, but also that a new uptrend has begun. With such a breakout, investor sentiment typically turns positive, buy orders increase, and general optimism begins to prevail in the market. It should not be forgotten that in order for the price to break this descending trend line, a rise supported by strong volume is especially needed. Low volume breakouts often fail, and the price may fall back into the trend. However, when a breakout is backed by volume, it usually confirms a trend reversal. and the price movement can gain strong momentum when combined with a new formation. For example, a retest after the breakout, where the price returns to touch the broken trend line and finds confirmation, can lead to a more decisive upward movement. In addition, the price showing signs of holding at the support zones formed along the lower band of the downtrend indicates that buyers are still active and that there is appetite among investors to take positions from the bottom. This can be seen as a further sign that the downtrend may be coming to an end, especially if the latest low is very close to or slightly above the previous low. The possibility of a double bottom formation arises, which could lead to a sharp and sudden rise following a breakout of the downtrend. Looking at this process from a broader perspective, even if the downtrend continues for a while longer, it may not be negative for investors. Instead, it can be seen as a preparation phase. During this time, the market consolidates, weak hands are cleared out, and the price builds a healthier base for a future rally. Therefore, the existence of a downtrend should not always be interpreted negatively. On the contrary, the opportunities that may arise from a breakout of this trend should be taken into account, and the moment of breakout should be closely monitored. In conclusion, while this descending trend on the chart may currently appear to be a sign of pressure in the market, it may also signal a major transformation. If the price manages to break this trend, not only short-term recoveries but also a healthy uptrend that could continue in the medium and long term may begin. Therefore, how the price responds to this technical level is extremely critical. All eyes will be on whether this important breakout occurs. And if it happens with strong and decisive volume, the market may become ready to test much higher levels. When we closely examine the technical outlook on the chart, a clearly descending trend structure is observed in the RSI indicator. This structure suggests that the RSI has been forming lower highs over time, which could indicate a weakening in market momentum. However, this seemingly negative outlook could also open the door to a significant opportunity, because the break of descending trends in the RSI is often considered a leading signal of strong and decisive upward movements in the price chart. RSI is an important oscillator used to measure whether the price has reached overbought or oversold levels. In this context, an RSI reading above 70 is generally considered overbought, while a reading below 30 is considered oversold. But what we are focusing on here goes beyond just those boundary levels. It's the trend structure of the RSI itself. Based on the current technical setup, the RSI has attempted to move upward several times, but has pulled back each time, failing to surpass the previous high. This has led to the formation of a clear descending trend in the RSI. However, there are some signs that this structure may be on the verge of breaking very soon. Although the RSI is currently moving in a region very close to this descending trend line, this latest move appears stronger and more supported by volume compared to previous rebounds. In particular, the positive divergence between price and RSI, where the price makes lower lows while the RSI forms higher lows, strengthens the expectation that this descending trend may be coming to an end and an upward breakout could be imminent. Such divergences hold a significant place in technical analysis as trend reversal signals and are closely watched by investors. RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.